Greetings everyone, Joseph James with the schooloftrade.com, back here once again with your trader's tip. Now tonight we're going to go over a vital tool that every successful trader uses on a daily basis, across the board. This specific tool is the most effective way of increasing profits, limiting losses, and removing the overall emotion from your trading. And it's always a wonder to me why new traders still have a problem using it. These tools are known as stop losses and profit targets, and they're just one of the tools a professional trader uses with every single trade. Now, before we get into detail on these tools, let's first begin with a short analogy. Now, I'm a baseball fan, of course. Well, let me specify. I'm a Red Sox fan. All you fellow baseball fans, you guys should be able to relate to this story pretty easily. Imagine it's the beginning of the season, and you and a teammate are going to have a competition to see who would have the highest batting average that year. Now, the only stipulation was that you had to swing as hard as you could and always try to hit home runs. And your buddy, the other player, he would have to focus on small singles or base hits. Now, any guesses who would win at the end of the year? Well, I think the answer is pretty simple. It wouldn't be you. The other player who focused on small base hits would surely have a much higher batting average because the likelihood of a base hit is far greater than a home run. And to hit one home run, you could speculate and say you'd have to forego 3 or 4 base hits because you'd be swinging so hard for the fences that you would simply miss a lot of balls and, you wouldn't hit as many home runs as you would base hits. No matter how you slice it, base hits always win ball games. This much we know if you're a baseball fan. And they lead to Hall of Fame players. I think we all can understand that. Now, just like a baseball player, traders, too, look for ways of increasing their average, or their profit and loss statements, or their winning ratios. And we use tools such as stop losses and profit targets to help us achieve that. Let's get the facts straight first. What does a stop loss order mean? What is it? It's an order placed with a broker to liquidate your position when it reaches a certain price. It's designed to limit a trader's loss on a specific position in the market. It's also known as a stop order or a stop market order. In other words, setting a stop loss order for 10%, say, below your entry price would limit your loss on that trade to nothing more than 10%. Now, profit targets use similar order types. However, they're used in somewhat the opposite way as your stop loss. They have similar order types, so stop market orders are used, but they're used to lock in profits earned on a specific trade. Now, we typically see traders use 3 profit targets. And these targets effectively lock in profits by liquidating only a portion of the position when the trade has made some money. Now, a typical situation for traders would be to use 3 profit targets and take 1/3 of the position out of the market as the trade moves in their favor, thus locking in profits by exiting that position. Now, on the left side of your screen, you'll see a trading dome. On the right side of your screen, you'll see that same trading dome, but with an order placed on it. Notice your point of entry is the yellow box, your stop loss is the red bar below your price, and then of course 2 of the 3 profit targets are in green above your entry price. Price trades down into your stop loss, you'll automatically exit your entire position, you'll be flat. If price trades up into the first target, you'll then sell, of course this is a buy situation, so you would then sell 1/3 of your position. Now if price continues up to your second profit target, you'll then sell an additional 1/3 of your position, and so on and so forth until your third target or your stop loss is triggered. So what's the big deal? Why not just take all of your profit off at once? Make it easier. Why not get out of your position when you want to exit it? You don't need some computer to tell you when to get out. Wouldn't it just make more sense, and wouldn't you make more money to simply wait for the price to trade into your third profit target rather than take off a small piece here and there and exit your position early? I mean, it's a winning trade, right? Well, here's why. First things first, the biggest threat to every trade is simple. It's fear and greed. In other words, your emotions will be the biggest obstacle you face in every trade. So using these mechanical tools to limit risk and take profits off the table are essential in removing the emotional aspect of your trading. Now, without a stop loss, you'd always be coming up with some reason to stay in a losing trade. You may have already decided beforehand where you would get out, But without the order in the market, us human beings, well, we're very good at selling ourselves on reasons why we should let this losing trade ride. It only takes a few moments for a losing trade to turn into an account-crippling mistake. As for profit targets, these work in very much the same way, this we already know, but they're used to remove the greed from your trading. Remember that baseball analogy? Well, let me ask you this. If you took 100 trades this year, and on half of those trades, you went for 20 points profit target, and the other half, you went for only 10 points, which profit target do you think you would hit more often? Well, the answer again is obvious. You'd hit the smaller profit targets of 10 points more often. In other words, by using profit targets in 1/3 increments, let's say, for example, you increase the likelihood of a winning trade. Just like that baseball player increased his batting average with smaller base hits. Now that you know what stops and targets do, what they look like, and how they work, you're also going to need a plan of attack to put them to use. Now remember, professional traders all follow a simple trading system or a simple set of rules. And at theschooloftrade.com, we provide all of our students with the trading system they need to know exactly how to use these tools in your trading. Our simple trading rules will tell you exactly where to place your stop loss. They'll tell you where your profit targets go, what to do with your stop loss, or how to trail your stop to maximize profits on every trade. We'll tell you when to move your targets and when to leave them alone, and how to use multiple strategies for trading different markets. Now, our system is easy to use, and it'll give you specific instructions on how to manage your trades using stop losses and profit targets for all the E-minis, that's the ES, the mini Dow, as well as Eurex futures such as the DAX and the Euro stocks, not to mention FOREX and individual stocks. You want to learn more? Email us today and get your invitation for our free weekly training webinar, where you'll have plenty of opportunity to learn more great tips just like these, look over the shoulders of some professional traders, and get answers to all your valuable questions. At the School of Trade, our focus is providing the very best in trader education, and we look forward to seeing you in our training. All you have to do is send us an email, that's sales@schooloftrade.com, and we'll get you started in the right direction together today. And remember, whether you're trading the E-minis, the DAX, or even currency futures or FOREX, our blog is always going to be a great resource for important information that will add value to your trading day. So be sure to check it out. While you're on our website, that's schooloftrade.com, our blog is simply /blog, but on the homepage, make sure you sign up for our newsletter. It's in the lower right-hand corner of our homepage, or send us an email for more information. Thanks for joining us tonight, and stay tuned for more videos.